Did you know that there's not one rate, there's not one fee, there's not one anything that a borrower would get? Hey guys, my name is Andrew Augustiniak from Neighborhood Loans, and today I'm talking about interest rates. Interest rates is such a hot topic, and lately it's been on a roller coaster. The world is volatile, tariffs are going, and the market keeps going up and down. I mean, we're seeing 0.5% rate swings in sometimes in one day. But overall, something that I get asked all the time is, Andrew, what's the rate today? What's the rate today? That is an impossible question to answer. And what I mean by that is, if a lender gives you one rate and one fee, they're not giving you all the options. In reality, when I present rates to a borrower, I'm presenting different rate options with different fee structures, meaning the lower rate you want or get, the higher out of pocket, the higher fee structure you may have. Adversely, if you want a higher rate and you want to save with the lowest amount of cash out of pocket, lowest amount of fees, you have the option to take a higher interest rate, which then reduces your fees. It's an adverse effect. Lower the rate, the higher out of the pocket. Higher the rate, the lower out of pocket, and everything in between. And so when I present rates and fees to a borrower, I say, hey, here's 5 to 7 different options. How do you want to structure it? How long do you think you're going to be in this house? Where do you think the market is personally based on your belief system with where, our economy is, where trade situations are, what the Fed is going to do? And the reason I say that is because if somebody thinks that rates are going to go down over the next year or 2 years, then they should take the lowest cash out of pocket possible, even if that bumps up their interest rate, because that break-even point was saving the upfront cash. And so in reality, there is no one rate, there is no one fee, because A, a lender should be presenting a bunch of different options to you. B, VA loans are different than FHA loans, or different than conventional loans, or different than jumbo loans, or different than bank statement loans. All of those different loan products have different rates associated with them. And last but not least, your rate will depend on your credit score and your down payment. How much are you putting down? Somebody who's putting 40% down is probably going to get a better interest rate than somebody putting 20% down. And so the reality is there is no one rate, there is no one fee. Depends on you, what type of loan you're doing, and ultimately what fee structure you want. If you guys have any other questions, our team works in 45 different states across the country, and we're here to answer all of your questions.